Okay, we're going to get started just at 6 p.m. Central. Welcome everyone to the FBN Crop Insurance Replant, Delayed Plant, and Prevent Plant 101 webinar. We're excited to bring you this information at a very timely moment when a lot of people are experiencing flood damage and excess precipitation across the country. If you're just joining up, I just wanted to mention that you will be muted during this presentation. And if you are joining by phone, know that if you check your email, you should receive a link to be able to view the slide deck that we're going to be presenting alongside the audio portion of the webinar. And so you can access those slides via your smartphone or on your computer. So what are we going to cover tonight? The agenda is first to cover best practices to ensure coverage. We're also going to dissect the three situations and provide you with information so you know what is relevant to you. Then we're going to dive into each of these coverages, starting with replant, then covering delayed or late plant, prevent plant, and then next steps and resources to make sure that you're getting the best information for your farm and your area. So who is on the webinar tonight? I am Kurt Alice on the right, strategy and operations for FBN Crop Insurance. But the main speaker tonight will be Eric Sorensen, our director of crop insurance here at FBN. We're excited to have his time tonight to be able to dive deep into these policies and provide as much information as we can for each of your farms. Before we begin, we have to mention a couple disclaimers. First of all, this webinar is for information purposes only. We will not take questions because of the detail required to provide specific recommendations for your farm. Consult your crop insurance agent directly for recommendations specific to your policy and your farm. We're going to get into a certain level of detail on this presentation, but once again, you have specifics to your farm and your fields that you want to make sure you are verifying all this information against your crop insurance agent. Also, FBN is a crop insurance agency, and we are licensed in most but not all states where our FBN members are located. But FBN Insurance LLC is an equal opportunity provider. Okay, now I'll hand it off to Eric Sorensen to dive into the main content section, starting off with the best practices to ensure coverage for your operation.
Kurt, thanks so much. Appreciate that. Good evening, everybody.
No problem.
At Farmers Business Network, we want to make sure that we're partnering with you and giving you relevant, timely information. And certainly we've got a lot of excess precipitation, certainly historic snowfall in some areas of the country, and just a lot of resulting flooding. And so really we have a combination of events right now over a large area of the US that we just felt like it was important for us to reach out to you and help you in whatever way we can to just maybe answer some questions. And we won't be able to answer every question tonight, like Kurt said, since there's so much to unpack here in the limited time that we have. We're going to do our best to go over some of the main highlights and then help you with what questions you may want to ask specifically of your agent so that you even know what to ask on some of these situations here. So the first slide we've got is kind of what we've distilled into some best practices to ensure that you've got coverage, okay? So this is always true, but I would say specifically now with prevented planting, replanting, delayed planting, those are situations we don't face every year. Replanting we might in areas, but prevented planting certainly not. Communication is always key. So make sure that you are communicating timely and just keep the open lines of communication with your agent. And then if a claim is turned in, you're going to be talking with your adjuster. Make sure that that communication line stays open with the adjuster on an as needed basis. with whatever type of claim you're dealing with. Can't stress that enough. The other thing is to make sure that you know your dates, and those aren't dates that you always think about. And so we'll go over that a little bit here. First off, there's the initial planting date, and that basically is the early, kind of the start line of when federal crop determines that you can plant your crop and still maintain your replant coverage. Okay, so any acres planted before the initial plant date would still have coverage, they just would lose their replant coverage. Final planting date, that's an important one we'll discuss when we talk about both delayed planting, or what we call late planting, and then also prevented planting. A lot of things really hinge on that final planting date. And then the late planting period is once we get past the final planting date, we need to know how long is that late planting period and what does that mean to us. So one requirement when it comes to prevented planting is you need to know that you're expected to attempt to plant fields that you can reasonably plant, and that is common to your area. So, you know, it might be to where there's vast areas of your farm that you're just not going to be able to get into timely. And if you don't get to them and cannot get to them because of insurable causes of loss by certain dates, then that kicks into motion prevented planting options and whatnot. So we'll discuss that a little bit more here in a bit. And then last but not least, keeping detailed records becomes very important on these type of claims, especially when it comes to prevented planting. So, you know, precision data records are great. You know, sometimes in the past I've seen where maps can be used. So those are great to determine the acres for prevented planting. So detail, again, is the key. Date, time, input receipts on your fertilizer and your seed and any other inputs that are going into the crop themselves and the legal description and whatnot. And then the FSA 578 acreage certification form is another good record to have and kind of cross-reference. And then there's obligations too to report prevented planting to the FSA office on that 578 form. And then your normal crop insurance acreage report. We want to make sure that things are all detailed out properly on that with respect to late planting and prevented planting. And then also any maps. A lot of times FSA maps are helpful. And then sometimes photos, if you've got some really drowned out areas, photos are always good to have. And certainly the adjuster would come out on your farm on a claim and be taking additional photos. So we've got a couple examples we want to go through, and sometimes it's almost easy to learn what not to do as much as it is what to do. Since there's so many things to do, we just want to give you some examples of things that are kind of common mistakes that can happen when you're busy and you're thinking about a lot of different things, and sometimes calling your agent isn't one of them. So for instance, in our Don't Be Like John, example one, and sorry to any Johns out there that might be on the line tonight. For instance, May 1st, let's say that John went out and planted 300 acres of soybeans. So John had a busy day of planting. And a few days later, on May 6th, we got just a really torrential rainfall. It rained 2 inches in about an hour, and it really damaged that initial 300-acre stand of beans. And so then a week later, on the 13th of May, John realized he's going to have to replant those 300 acres of beans. A lot of areas were washed out, had some germination issues. Maybe it was a little bit of a cold spell then. And so then on the 14th, the very next day after he got everything replanted, he decides, you know, I probably should call my agent and just report this to him. And so he does that. So let's take a look at what the outcome would be in that situation. So the result of John calling, not before he replanted, but after he replanted the 300 acres, is that he receives $0 for the replant claim because he needed to turn that notice of loss into his agent prior to replanting. And that's a super unfortunate event if that happens, especially if there's many acres involved. Companies used to be a little bit easier going on that topic, where they would kind of work with you a little bit, and if they could kind of tell some evidence, especially on some minimum tillage or no-till acres, they would go ahead and cover it. But anymore, they're just really strict on that. And a lot of the reason for that is RMA has strict rules around that. So the lesson is communicate with your agent, and certainly inform your agent before you replant. Now, sometimes, I'll hear feedback from the farmers saying, well, I didn't have time to contact anybody. And, I didn't have time to maybe have an adjuster come out on my farm. I just needed to get them replanted that afternoon. And if that's the case, what they'll do a lot of times is you call the agent calls the company right away. Sometimes a claims adjuster can call you within a matter of minutes. And if they know that time is really of the essence here, that you need to go out and replant that, they can give you approval over the phone. But until that happens, you will not get reimbursement on replant if that doesn't happen before you replant those acres. So it's super important. Here's another example. John, he made a few mistakes. So here's example number 2. Don't be like John. So the final planting date for John's area on soybeans is June 15th. So what that means is any acres that were planted up to and through June 15th have no reduction in guarantee. It's just standard issue, reported on your acreage report, move ahead. But he wasn't able to get them planted due to insurable cause of loss. It was just wet, wet, wet. So anyway, on June 18th, 3 days after the final planting date, he plants 200 acres of soybeans. And then a week later, on the 25th of June, he plants another 100 acres of soybeans. So the good news is he's got all the soybeans in. So then a few days after he gets them planted, on the last day of June, he meets with his agent and he reports those 300 acres of soybeans, but he doesn't realize the importance of making sure to report the 200 acres planted on June 18th, and then recording the 100 remaining acres planted on June 25th. So what he does is he reports all 300 acres on June 25th. Okay, so the problem with that is it results in him having a reduction in coverage that's a little bit greater than what he would have had he properly reported the 200 acres on the 18th and the 100 planted acres on the 25th. So what happens on that is, since you have a reduction in coverage of 1% for every day after that June 15th final planting date in his example, he's got additional reduction of 7% on the 200 acres planted on the 18th. It should have had a 3% reduction for being 3 days after final planting date. And since he didn't record it that way on his acreage report, he got the full 10% reduction. So in that case, using an APH of 60 bushels per acre beans and an 80% level coverage, it would have cost him roughly an additional $6,000 on what he should have been reduced versus what he was reduced in guarantee. So if he didn't have a loss, it wouldn't be money out of his pocket per se, but if he did have a loss, then it probably would be. So the lesson here again is keep detailed daily logs of your planting activity, especially once you get into that late planting period, including the dates and the crop and the acreage by day. So we've got 3 main topics here that we're going to go over, and some of this may be relevant to you. I hope all 3 aren't relevant to you this year for your sake, but we're going to go through them and just cover a few different bases on them. So replant is the first one here, and that's existing damage to planted crop, and then you're planting to put new seed in the ground. That's called replant. Okay, replant is not putting a different crop in on the same acres. It's replacing damaged crop of the same crop on the same acres. Okay, so what happens with a replant claim is you're expecting to get reimbursement for your replant costs, and that's kind of a standard factor we'll go over a little bit later that RMA's got figured out for each crop. And then delayed or late planting is when you're planting an insurable crop after the final planting date in what we call the late planting period, Not every crop has a late planting period, but most of the major crops do. Sometimes that late planting period is 25 days long. Sometimes it's something less than that. And so what happens when you plant acres in the late planting period is you have a reduction in guarantee. And then last but not least, certainly, there's a lot to unpack here in prevented planting. Prevented planting is when you're unable to get the seed planted in the ground by the final planting date or during the late planting period. And so what you're hoping for there, if you have a prevented planting claim, is that you get paid for a percentage of your expected revenue. That is the intention. It ends up being a percentage of your crop insurance guarantee for prevented planting. So one thing we'll do on each of the three of these topics is we'll go through and define it according to the policy provisions. I'll try to give you a little bit of color additionally here, and then we'll go through what it takes to qualify for each of these things, and then we'll go through a few FAQs after each one. So by definition, replanting for crop insurance means replacing the damaged and insured seed or plants of the same crop on the same acreage. So again, if we're switching crops, that's not replant, that's first crop, second crop. So replant is always going from the same crop to the same crop on damaged acres due to insurable loss. So to qualify for replant payment, we need to make sure that we are timely submitting what they call notice of loss, and that's usually a phone call to the agent within 72 hours of the cause of loss. Okay, so examples on replant, and some of you have been through a replant claim, some of you probably not been through a replant claim. Sometimes it's a hail event, and that's more of a specific time when we know that a hailstorm comes through and does damage. That clock of 72 hours is something that people can kind of know, versus if you have some germination issues that really takes, maybe a couple weeks to figure out that you've got a germination issue. It's a little hard to put your finger on what is 72 hours from that time period. So as a result, this is a little bit loose when we talk about 72 hours, but really 72 hours from your discovery of the cause of loss can be a guideline there. So of these four qualifications here, number 2 would be contact your insurance agent before replanting. We stressed that before, stress it again. You're just not going to get paid if you replant and then call your agent after the replanting's done. So we certainly don't want that to happen. And then item number 3, the acreage must be at a minimum the lesser of 20 acres that you're replanting, or 20% of the insured crop acres in the unit. Okay, so an example there is if you've got 100 or more acres in the crop unit, then, and that's by county, so it'd be 20 acres. If you have less than 100 acres, then the 20% rule is going to kick in. So let's say you had 50 total soybean acres and you were going to replant 10 or more acres, you would meet that 20% rule if you only had a total of 50 acres in the unit. The acreage, point number 4, the acreage was not initially planted prior to the initial plant date. So that just means that as long as you planted by the initial plant date or later, you would have replant coverage. If you planted any acres prior to the initial plant date, those acres would retain their revenue guarantee or their yield guarantee, depending on what kind of coverage you bought, but you would lose the replanting coverage if we're planting too early. So then a few questions that come out about every time here is, so what happens if I replant twice in the same year on the same acres? Okay, that's an easy one. Basically, you can only receive one replant payment, one replant indemnity on the same acres, okay? I've seen situations where that happens. Thankfully, that's fairly rare, but it does happen. If it's on other acres, that's fine. You just can't collect more than once on the same acres for replant claim. So what if I have an area-based coverage or CAT coverage? So let's take the area-based question first. If you've got an area-based coverage, and area-based usually means county-based coverage. So for instance, margin protection is one type of coverage. Another is area risk protection. If you've got either of those area-based plans, you really don't have replant coverage, okay? So you're gonna have to self-insure on that, or there are some companies out there that will offer a private product when you're taking area coverage that you would take usually by sales closing date, to where you could kind of supplement the missing replant coverage on the area-based coverage. So the next question, that two-part question, is CAT coverage. Do I have any replant coverage on a CAT policy? Simple answer, no, you don't. So a CAT policy is pretty rare these days, but there's a few folks out there taking it. That is a 50% level of your APH at 55% of the price selection. That is a CAT policy. So now we'll move on to topic number 2, delayed or late planting. And so by definition, in the provisions of the policy, it says acreage that is initially planted to the insured crop after the final planting date. What happens for late planting, if you're in that situation, is that your coverage guarantee drops by 1% each day through the duration of that late planting period. So to qualify, basically any acres that are planted during the late planting period, which is typically 25 days, some cases it's less than that, after the final plant date. So for instance, John, earlier on when he was planting some late soybeans, his final plant date was June 15th. And so 25 days after that would be July 10th, okay? If he was in an area that had a 25-day late planting period. The end of it would be July 10th. And so since that can vary, you want to contact your agent for county-specific information that's relevant to your farms in your area. So as far as some questions that we get frequently on late planting, again, this area-based coverage or CAT coverage question comes up. If you're taking margin protection or area risk protection, any of those area county-based products, basically what the provisions say is there's really not a late planting period per se, but what I've noticed is they will take the final plant date for an APH-based crop and move it out to the end of the late planting period for these area-based coverages. So for example, using John's soybean example again of June 15th final plant date, if John had an area-based coverage, more than likely his final plant date for area-based coverage would be July 10th, okay, on the area-based coverage. What happens if he plants after the late planting period? No coverage on that area-based plan. So it's a pretty hard cutoff. There's no reduction in guarantee during that period, but then once you plant any acres after the late planting period or after what they call the final plant date for area-based coverages, then there's no coverage on those acres. What happens if I have a CAT policy? A CAT policy really, when it comes to late planting, works just like any risk protection, revenue protection, or yield protection policy. It's going to reduce 1% for each day after the final plant date on the CAT policy. So another question is, I planted some acres over multiple days throughout the late planting period. What do I do? We kind of covered that a little bit earlier, but basically it's important to have a daily log and make sure that you're documenting how many acres are you planting each day throughout the late planting period and where are they at, what crop unit do they belong to. So now the topic that really has a lot that a person could unpack from this, and certainly we're not going to give an exhaustive review of prevented planting. It's going to be kind of high level here. We're going to try to answer some of the most common questions that people are going to have on this. Due to the really specific case-by-case nature of prevented planting, unfortunately, we're just not able to cover every issue. It would take us a long time to go through that. But let's start with the definition here, prevented planting. The policy says, prevented planting is the failure to plant an insured crop with the proper equipment by the final planting date or within any applicable late planting period, we discussed that earlier, due to an insured cause of loss that is general to the surrounding area and that prevents other producers from planting acreage with similar characteristics. So the other definitions for replant and lay planting were pretty simple. This one has a few things to unpack, so let's unpack it. So first off, we know that prevented planting is the failure to plant insured crop with the proper equipment by the final planting date. So it's assuming that you do have the proper equipment. If it's found in a claim that you do not have adequate or proper equipment to even plant the crop, your prevented planting claim could get withdrawn. So that is one requirement. You can plant throughout the late planting period, or if you determine that, you know what, I give up, we're in the late planting period, we're after the final planting date, I decided it's just not going to work for me, you turn that notice of loss in, kick that into motion, you can do that for prevented planting. Has to be due to an insured cause of loss. Okay, what could those causes be? Not going to go over every cause. The main one right now is going to be excess precipitation and flooding. There are other reasons a person could find themselves into prevented planting. The main one always is excess precipitation and flooding. Has to be general to the surrounding area. What does that mean? Has to mean that you're not out there trying to farm in some cattails and swamps and you're the only person in the county or your area that ever has prevented planting. That is pretty much what that means. And right along with that, that prevents other producers from planting acres with similar characteristics. So again, they're just saying, don't be the only one if you're going to turn a prevented planting claim in. And certainly you won't be the only one in a year like this. So with that, let's go ahead and go through the qualifications for replant. There's 5 that we'll go through here, and we'll just take number 1 here. So filing a notice of loss within 72 hours after the final planting date has arrived, or as late as 72 hours after the end of the late planting period. So again, if you're in an area that has a 25-day late planting period, then any time from the final planting date through the next 25 days, you can file a notice of loss within 72 hours of that. What typically makes sense, in my opinion, is if you have acres that aren't planted by the final planting date, you meet all the other criteria to qualify for prevented planting claim. It's common to the area. The acres are eligible, they're available for planting. It's probably a good idea to contact your agent at that time and let them know, just so they have an awareness that, hey, I could have a prevented planting claim here. And you may even want to submit that notice of loss and turn that claim in. Because if you end up planting those acres later on, let's say it dries out a few days later and you get it planted, then that prevented planting claim will just get withdrawn. So number 2, the acres must be physically available for planting. And then 3, acreage must be at a minimum the lesser of 20 acres or 20% of the insured crop acres in the unit that are not planted due to insurable loss common to the area. So again, kind of like we talked about on replant, this 2020 rule comes into play. You know, for example, if you had 50 acres of soybeans in a unit and you had 1 acre prevented planting, you couldn't get planted, it wouldn't qualify because it doesn't meet the 2020 rule. But in a 50-acre unit, if you had 12 acres that were prevented from planting, then you would qualify. You'd meet that 2020 rule. Number 4, acreage planted in at least one of the 4 most recent crop years. One commonly used phrase in crop insurance is, for every rule, there's about 3 or 4 exceptions. That does apply to item 4 here. I'm not going to go through all the exceptions because it gets lengthy and complicated, but that is a main criteria to meet, that the acres have been planted in at least one of the 4 most recent crop years. And then last but not least, to qualify, a couple situations here when added land is involved. If you are planting acres for the first time in a new county, a county that's new to you, you need to make sure that you have listed intended acreage or intended acres on the application form and submitted by sales closing date for any new counties that are added by sales closing date on your application. So the sales closing date is that important date every year when we have to make our crop insurance decisions, coverage decisions. Maybe we cancel policy, take a new policy, change our level of coverage, change our plan. That's sales closing. There's the other situation where, let's say that you're adding new land in a county that was added after sales closing date. There is a provision for that called added county. You just need to have intended acres submitted within 10 days after picking those acres up. And every company has a little bit different procedure with how to do that. If you run into either of those, you want to make sure you're talking to your agent about it. So let's just go through a simple example here for prevented planting. You know, at the end of the day, prevented planting claim can really end up being a significant dollar amount if there's many acres involved. And so we want to talk about the numbers here just so you have a basic understanding if you've not been through a PP claim. Let's just go ahead and run through that. So in our example, it's going to be a simple corn example, and we're going to assume that all qualification requirements are met. Okay, this is corn. We've got an APH of 180 bushels. We've got a projected price of $4 per bushel. And we've taken revenue protection at the 80% level. And then we went ahead and took the optional 5% buy-up option on prevented planting. So those are the assumptions in our example. So the math would be 180 times 80% level times a $4 projected price times my PP level of 60%. And that all adds up to $346 per acre PP payment on your eligible acres. Okay, so it is very significant, and that can go a long way in paying, basically replacing some lost income because you weren't able to get a crop planted out there. And a lot of times, a lot of these acres are being cash rented, crop shared, what have you. That is a significant loss if we have no opportunity for income there. So prevented planting is a really important component of the coverage. One we don't use often, but when we do use it, it really comes in handy. Let's go ahead and go through some of the frequently asked questions on prevented planting. If we truly had all of the FAQs that we've heard, it would be several slides worth. So we're going to go through some of the most common ones this evening. So first off, again, what if I have area-based or CAT coverage? Do I have prevented planting coverage? Short answer on the area-based coverage, no, you do not. Unless you bought a private product from your company. Usually that had to be bought by sales closing date to replace the PP coverage that you don't have in the multi-peril area-based coverage. PP coverage is available on a CAT policy. However, it's very minimal because again, the standard coverage on a CAT policy is only 50% of your APH at 55% of the price election. So then the standard in most areas of corn, for instance, would be 55%. You cannot take a PP buy-up of 5% on a CAT policy. So you just get the standard PP coverage there. So you do have PP coverage, it's just very minimal in nature. Could prevented planting affect my premium cost? There can be several answers to that. The short answer is yes, it could affect your premium cost. Very specifically and most significantly, if you have enterprise units, and to qualify for enterprise units, you got to meet certain criteria. It's really based on how many planted acres you have as to whether you qualify for an enterprise unit discount at all, and then what that discount ends up being really hinges on your planted acres. So let's say worst case scenario, you didn't get any acres planted and it was eligible for prevented planting. The good news is you would get prevented planting indemnity that'd probably be significant. The bad news here is that your premium cost would increase somewhat significantly because you wouldn't qualify in that case for any enterprise unit discount. And so you would go back to, whatever your policy defaults to, whether it's optional units and pay for that or basic units. So yes, your premium could be affected by prevented planting. What are the standard PP payment levels? You want to make sure that you're checking with your agent because every area, every county could be a little bit different and every crop could be a little bit different. In a lot of states and a lot of counties, a lot of areas, you've got corn and wheat at 55% is the standard PP payment. And then you've got that 5% buy-up you can choose to do for a little bit of additional premium by sales closing date. Your grain, sorghum, and soybeans are going to be a standard of 60%. And so when I say 55%, what is it 55% of? So it's 55% of your timely planted guarantee. So if you took 80% coverage, it'd be 80% of your APH times the projected price times 55% in that example. By the way, PP coverage several years ago used to pay you whatever the final price was per bushel. So for example, if you had a revenue protection policy and the harvest price ended up being $7 corn, you'd get paid $7 times the balance of your PP guarantee. For several years now, probably 7 or 8 years, last 7 or 8 years, it is just PP coverage is just based on the projected price. So the harvest price has nothing to do with the PP payment anymore. So some things that we don't have time to go over specifically, and it's just too case specific to do so this evening on our webinar. But things that you might want to consider discussing with your agent is, if you're facing a prevented planting claim, is just making sure you understand your maximum eligible acres by crop and by county. That is definitely something to talk to your agent about, and they can help you discover what that is and whether it would impact you or not this year on your prevented planting claim. And then also, if you've added acres that just recently emerged from the CRP program or any other USDA program, you may want to ask them whether that impacts your ability to collect on prevented planting, because it might not, or in some cases it might. So very important to check that out. And then, what are the options, after you have a PP claim documented, properly by the claims adjuster for having a cover crop. A lot of folks don't think about this until a little bit deeper into the year is, I don't want to leave this ground fallow here and just grow up to weeds. And so what are my options? How can I put a cover crop on there without affecting my prevented planting coverage? That's definitely something to discuss. There's a lot of important dates and timing involved with that can vary based on the situation. And then double cropped acres kind of depends on what part of the country you're in and whether your county recognizes double cropping as an insurable practice. So definitely, if you're looking at double cropping and prevented planting, and you're at that intersection, you need to discuss that with your agent. And then, is my claim going to trigger an APH review? That's a big one. And APH reviews are triggered at $200,000 indemnity per crop per county. And so if you had several acres of prevented planting, you could actually hit that number this year, and that would trigger an APH review. So if you're close to that, or you think that could be a possibility, you may want to discuss with your agent what that means, so that you can take some time to prepare for that and make sure you're ready for that review. And so just to recap again, for replant, delayed planting, and prevented planting. So replanting, again, is existing damage to planted crop and then just basically replacing and planting new seed in the ground. That is replant, and a replant claim is intended to provide you reimbursement for the replant costs that you've incurred. And then delayed planting or late planting is just simply planting an insurable crop acres after the final planting date during that late planting period. There will be a reduction in guarantee equal to 1% for each day that you plant after the final planting date. And then again, last but not least, prevented planting is where you're unable to get seed in the ground by the final planting date or the late planting period. And what you're expecting there is payment for a percentage of expected revenue, and payment for percentage of expected revenue comes from a percentage of your full timely planted crop insurance guarantee. So With that, I'm going to hand it over to Kurt, and I just appreciate everyone tuning in this evening. Hopefully you found this helpful. I believe we're going to do a sharing to those that have tuned in tonight if you want to recap or share this with some of your friends. Thank you.
Thanks so much, Eric. Yeah, just to reiterate that, we covered a lot of information tonight. That was awesome, Eric. But we know that it was a lot of detail. We'll be sending a recording of this webinar to each of you in attendance by email. So you can review this material in more detail, skip around in the video to the sections that were specific to your farm. Once again, if you have additional questions, please reach out to your crop insurance agent, whether that's an FBN agent or otherwise, for information specific to your ground and your policy. If you want to do research on your own and learn more, the RMA is the best website for state and county specific resources, and you can find that at rma.usda.gov. They have more information than you would know what to do with, but a great resource for your own personal research. And then if you're interested in FBN's crop insurance, once again, FBN is a licensed crop insurance agency. We have a field agent team across the country and are licensed in most states where FBN members are. Go to fbn.com/try-insurance. That's fbn.com/try-insurance. And you can speak directly with one of FBN's crop insurance agents in a geography near to you. So that's all we have tonight for everyone. We hope this was helpful and hope everyone has a nice evening. Thank you again, Eric, for your time.
You bet, Kurt. Thanks, everyone. Good evening.